Alright everyone, welcome back to another episode of Bitcoin TA. If you're new to the channel, warm welcome. So, what the hell is happening in the Bitcoin price? We're down 11% today and we're already coming down to one of my macro price targets. This is what I want to talk about in this video. I'm going to be quick firing between different charts because I want to give you a range of perspectives. I want to talk about where the Elliott wave theory predicts the bottom is going to be for Bitcoin. I want to talk about the Bitcoin dominance and how this is likely to affect Bitcoin and the altcoins. I'm going to be moving on to some of my macro charts, talking about moving averages, previous all-time highs. We're going to be looking at how Bitcoin is performing when accounting for the money supply and how this has previously reacted once we do come down to these levels. We're going to wrap things up talking about the dollar and the stock market. So like I said, I want to provide you with a large array of perspectives in today's video. With that said, let's jump right in and not waste any time. So, starting off with the Elliott wave theory, I'm just going to spend a minute on this because I provided an in-depth perspective on this yesterday. I'm going to wait to talk about the momentum indicators and the volume until we hop over to some of our macro charts. But within Elliott wave theory, typically, we always bottom between the one wave and the free wave. Your first or your one impulse is up here and your free impulse is up here. Now, obviously, we cannot bottom higher than we already are at this moment in time. So, according to Elliott wave theory, the bottom should be anywhere between the levels we're at now, which is 23,000, all the way down to your one wave back down here at 14,000. Now, I personally do think 14,000 is a little bit overkill. I don't think we're going to be coming anywhere near that range. So I'd say, in my opinion, if we were going to have a traditional Elliott wave bottom, I'd say we'd bottom between the free wave and the one wave, probably very, very close to the 19 to 20,000. So if we come into the lower time frames, you can see since our macro 5 wave on the Elliott wave theory, so we had our 3 impulse, 5 impulse, and now we are in our macro correctory A, B, C. Within these correctory waves, when you are in these bearish impulses to the downside, you impulse in 3 bearish waves. So you have your 1 bearish impulse, your 3 bearish impulse, and your 5 bearish impulse. We've already had your 1 correctory wave to 2, 3 correctory wave to 4, and at this moment in time we are sitting in the 5 wave. So yes, I know the markets are absolutely getting decimated right now. They do look really, really ugly, but I am of the opinion that the bottom is getting very, very close. On my channel, I've actually been bearish for the past... I've been bearish for at least the past 6 weeks. If you head over to my Twitter at 618_cowboy, if you look at any of the videos I've done in the past 6 weeks, I refuse to compromise my integrity. I told you how it is. I told you that we were going lower, and that is what we're seeing right now. A lot of people are getting extremely bearish while we're in this phase, but at this moment in time, I'm getting more bullish on Bitcoin than I've been in the past couple of years, because I do think the bottom is at least going to be close in terms of date terms. I do think we can get battered pretty hard in terms of price within the next month or two, though. So with that being said, if we're looking at the 5 wave on the Elliott wave theory, in my opinion, the bottom should be around about this 20,000 zone. Let's move on to the next chart. I'm going to leave the Bitcoin dominance until a little bit later. I want to talk about the fact that in this macro chart that we previously talked about, we did break down from this massive, massive ascending triangle. If we extrapolate the price target of this, it seems like today we've already come down and hit the price target on the head. Does this mean that we can't go lower? Absolutely not. I do think that we can still go lower. And if we look at the volume, I want to specifically look at some of the volume on the exchanges right now. Over on Kraken, 8.8 thousand Bitcoin has been traded and predominantly sold in the past daily candle. And you know, if we come over to the 4-hour, you can see this has predominantly been in the past 12 hours. This literally happened as I was going to sleep. The massive capitulations obviously ensued as I was asleep. It is what it is. We have to work with it. If we look at the squeeze mom as well, I've been warning you about this as well. The squeeze mom, if you're new to the channel, this is our momentum indicator of choice. A lot of people like to use the MACD. I'm a much bigger proponent of the squeeze mom. I think it absolutely works perfectly. And when was the last time the squeeze bomb had a trend shift? Well, we were moving from this dark red phase, indicative that bears were either taking a break or losing control. We shifted over into light green when we had our impulse to the top of the EMA ribbons, and as we started to roll down back into dark green, this was the 8th of June. What happened on the 8th of June? This is what I mean. This is such a powerful indicator on the daily and higher time frames. 31,100 is when we shifted bearish over on the squeeze bomb, and currently at this moment in time we're approximately 24% down since the momentum shift. I would also like to highlight, you know, a lot of people think the bottom is going to be very, very near. A lot of people have been saying the bottom has been in for months. I've been obviously a contrarian trader. I've got a lot of hate for that. I've got a lot of flack for that. People, you know, they were hating on me when I said Solana was going to $25. Solana hit 25 today. People were hating on me when I said ICP was going to 0. It's still heading down to 0 in my opinion. People hated on me when I said Strong was going to 0 when it was at $270. It's now at $8. People hated on me when I said Ape was going to 420. We're now at 345. People left comments saying, you know, in my dreams, Cadena's going to $1. They said that at $2. They said that at $3. They said it at $6.50. We're now at $1.40. So the point of my channel is not to try and get everyone to like me. I'd much rather have a high level of integrity and maintain my opinions and tell you how it is, rather than just say, guys, the bottom is in, we're going to the moon. Because, you know, if I was a moon boy, I could have loaded up this chart and been like, look, we're coming down to the 200-week moving average. Every other time the bottom was absolutely in, so we're going to the moon. In my opinion, this is not going to play out exactly as it did in previous cycles. So let's jump right back in. I wanted to look at the volume while we were on this chart. So 8.8 thousand sold on the daily over on Kraken. Let's head over to some of our other charts like Binance and Bybit, which are obviously known for leverage trading, so there's going to be high amounts of volume over on there. Over on Binance, 148,000 Bitcoin has been sold in the daily time frame. This is absolutely insane. The last time we saw something like this, we were heading down to 29,000. We lollygagged for a prolonged period of time, and then we started to leg down. I would also like to highlight, a lot of the time when you get these mass fear candles, like if we look, you can see mass fear candle right here. The bottom was in the local time frame. I have to emphasize that, not the macro time frame, the local time frame. You can see large amount of volume came in, we dumped into the price, lollygagged for a couple of weeks, broke down. Large amount of volume, we broke down into the price, lollygagged for a couple of weeks, and then we continued to break down. Large amount of volume coming in right here, we broke down, lollygagged for at least a week, and then had a fake out and then broke back down. Large amount of volume coming in over on the 19th of May. We broke down into the price, lollygagged for a very, very long period of time before coming back up. So I do think, at least somewhat in the local term, that the bottom for Bitcoin is in. And once again, I have to emphasize this because, you know, I know some people might not differentiate between the local tops and the macro bottoms. A local top is where the price, or a local top or a local bottom is where the price temporarily tops or bottoms in the lower time frames. Like for example, you can see this was a local top. You know, we were lollygagging, we came up, this was your local top, and we started to break down. Once we capitulated all the way down here, this was your local bottom. We lollygagged for a prolonged period of time before we broke back down that local bottom. This is an all-time high. And then if we come back to the bear markets, this is an all-time low, this is an all-time low. So we definitely need to differentiate. I really do want people to understand my perspective on this, that I do think the bottom in the local term, if it hasn't already printed, it is probably printing very, very soon. I find it hard to believe that Bitcoin is going to massively cascade much more at this moment in time. I find it much more likely we're probably going to lollygag. We're probably going to pump into the FOMC meeting, which is on the 15th. By the way, we've got about another 2 days to go. I would also like to state the Chicago Mercantile Exchange, which is the CME group, predicts 100% likelihood of an increase in the interest rates. Now, if you're a veteran to my channel, you already know I've talked about the increase in the interest rates. The last time we had an increase was on the 4th of May right here. We pumped into the price, which is what I have been predicting. I have been saying I do think we're probably likely to rally on the day of the FOMC meeting. But what soon ensued, you know, I'm not even going to draw it down to this low, but within literally a week, 2 weeks or so, we came down 33%. And I do think we're setting up for something like that. Again, if the Fed increases the interest rates by 50 basis points, which I think they are at least going to increase the interest rates by 50 basis points, then we're probably going to massively capitulate the day or the day after that day. So at this moment in time, Jerome Powell, which is the chairman, has been saying that he is going to keep on increasing the interest rates by 50 basis points month over month over month. He specifically said they are not going to stop until the Fed sees signs that inflation is becoming transitory and it's going to shift over into a phase where inflation is not high and rampant. At this moment in time, literally a week ago, we just got news that the CPI, the Consumer Price Index, shot up to 8.6% year to date. That was an increase of 1% from the previous month. That is crazy. That is the complete opposite of what Jerome Powell said he would need to see to stop increasing the interest rates. Because of this, I think it's highly likely that we're at least going to see a 50 basis point increase. But I've actually been seeing, I've been, talking to some people that are within this group, and I'm very, very confident that we potentially might be seeing higher than a 50 basis point increase. I would like to say minimum, my goal is 50 basis points. I think it'd be more likely we shift over into a 70 basis point increase, which would probably allow Bitcoin to have a massive capitulation. So we talked about the volume over on Binance, 150,000 traded today. If we look over on Bybit, today, 286,000 Bitcoin has been sold. This is not a US dollar valuation. This is in Bitcoin. So 286,000 times $24,000. We don't need to do the math. That is a big number. Let's look at some of the other charts before we do shift over into another chart. I know I'm speaking fast through this. I'm trying to get a lot of information condensed into one video. I know people appreciate these shorter videos rather than longer videos. So if I'm talking too fast, you can always change the speed of the video to 0.75, or you can just scroll back 15 seconds if you miss something that I said. But let's look at some other exchanges before we do move over. Bitstamp. Over on Bitstamp, 6.9k traded. If we look over on Coinbase, 41,000 traded. These are spot exchanges, by the way, so these are large numbers. When you look at Binance and Bybit and Bittrex and all of that, you're basically looking at predominantly leverage traders, people leveraging Bitcoin. That's why we've got these high numbers. But all of these, Kraken, we already mentioned Kraken, Bitfinex. Volume on Bitfinex is not loading in. That's no worries. Oh, this is the shorts, my bad. So let's move over into the shorts. Bitcoin shorts are currently running rampant at this moment in time. The longs, I believe the longs are also breaking into new all-time highs, but predominantly the shorts are, if these are increasing, then it's not going to be looking good for the price. Now, I've highlighted this before, but the moon line for the shorts is this level right here, 5,057. If we do pump above this approximate level at the top of this box, we're likely to go on a massive rally. Why is that? Well, look at what happened the last couple of times we spike. Longs increased by 297% after pushing up from this box. Here, longs increased by 295%. From here, we came back into the box and then just bounced. So from here, once we broke out, 120% increase in the shorts. Here, once we broke out, 425% increase in the shorts. As you can see, this is a big area of resistance. Sometimes we have these spikes above it, and if you do not close daily and weekly candles, because predominantly these moves are witnessed in lower time frames, which is why, when you shift over to the weekly, you notice, sometimes we have these wicks above, because it's most of the time what happens with these shorts is they wick above and they get pushed back down very quickly. These shorts are almost always short-lived. So for example, we're on the weekly time frame. You can see that the most amount of time we spent pushing up on these shorts was 1, 2, 3, 4, 5 weeks. And bear in mind, this could have been half the week down here. So 4.5, 5 weeks. We really don't spend too long above this neckline on the shorts. However, what I would like to say on this is that if we do push back above, we're very likely to start cascading. Another super bearish thing we're seeing is the fact that Michael Saylor's trade on Bitcoin is now down 330 million. And bear in mind, this was made 2 days ago. What has been happening in the past 2 days for the Bitcoin price? Well, if we look at the daily, we've gone down 15.5%. So I talked about this before. Michael Saylor has a margin call, and if we do keep on cascading, Michael Saylor and MicroStrategy are going to have to liquidate some of their Bitcoin. Why are they going to have to liquidate some of their Bitcoin? Because they purchased that Bitcoin using debt, and they can't afford for the price of Bitcoin to go down, because if they can't pay off their debt, they're obviously going to be absolutely screwed. So Michael Saylor's margin call coming in. This is not a good sign. Shorts are rocketing to the upside right now. Let's move over to some of our macro charts, and then I'm going to wrap up with the stock market. If we look at this macro chart that we're running off, I talked about this ages ago. You know, we were predicting this massive move down to 23,000 when we were literally sitting at about 34,000. If we look at the market structure, if you're a seasoned veteran to my channel, you will recognize this chart, because I've been looking at this for months now. Previously, the previous bear market, we had this descending triangle pattern. We were consolidating, and then once you broke down, you had that massive cascade, very, very short-lived. What are we seeing right now over on the Bitcoin price? Descending triangle, breakdown, massive cascade. So I do not really expect us to keep on going down, you know, month after month after month. I do think that we're at least going to find a local bottom very, very soon. I think we are coming down to the 200-week moving average, which at this moment in time, if we were to come down to this on the weekly time frame, which is looking more and more likely, the 200-week would be coming in at an approximate valuation of $22,400, which represents about another 5 to 6% drop to the downside, which, as you can imagine, really wouldn't be too much after what we've seen today. Why do I think we're coming down to the 200 week? Well, if we look back to previous market structures, let's go back to the 2015 bear market. What do you notice if we extrapolate this 200 week back just another couple of weeks? Because bear in mind, this wouldn't have loaded in at this point, because it is the 200 week moving average. It takes in data points from 200 weeks worth of data. So if we take this back here, you can see the 200 week doesn't load in until we obviously have 200 weeks worth of data traded. But if we switch this over to 190 week or something of that approximate valuation, you would see that we pretty much did hold all of the candle body closes. Candle body close, candle body close, candle body close, candle body closes on the 200 week. That was where the bottom is. If we come over to the 2018 bear market, candle body closes were all over this region here. We completely bottomed at the 200 week, and we even back tested it at a higher valuation. March 2020 pandemic scare, where did we come down to? Yes, we wicked back down to the lows of this this support and resistance range. We back tested it as support. However, the candle body close was exactly on the 200 week moving average. You can see we broke down, went all the way down here, pumped back up. Candle body close was on the 200 week, broke back down, made a higher low, came back up. Candle body close was just above the 200 week, and then we started going on a rally once we held it. So while I would like to emphasize the geopolitical state of the economy is much different than it was in 2018. We didn't have hyperinflation running rampant, we didn't have 8.6% CPI, and we didn't have Biden running America. So it's probably going to get a lot worse. You know, the price of oil has been going on a rampage as well. So typically this is not a good sign when you see oil ramping up. So for example, you can see this was 2008. What happened in 2008? The financial crisis. When this goes up, it is not a good sign. So oil is typically not something that I cover on this channel, but it is something to note because it does massively affect the state of the economy, and thus how much money could flow into the stock market, how much money will flow into crypto, and subsequently whether we're in a risk on or risk off environment. I've been saying this for the past month or two, but we are in a risk-off environment. We are in a bear market. A lot of people disagreed with me a month or two ago when I made videos saying Bitcoin, we've now broken into a bear market, but we're coming into fruition. The point of bear markets is typically you do not realize you're in a bear market until they're almost done. So I would really like to emphasize, yes, we are in a bear market. Do I think that we're going to be going down for the next couple of years? Absolutely not. Like I said, you know, back here, because I was in this market structure in 2018, so I know exactly what the market psychology was like. People still did not believe we were in a bear market after the first week down. They only believed we were in a bear market after we had this massive capitulation. That's once it finally started getting through to people's heads that we were in a bear market. And at this moment in time, this massive this massive candle body that pushed to the downside is very, very similar to what we're witnessing at this moment in time. So I think the market psychology lines up, the charts line up. A lot of people say, you know, expect the market cycles to be different, and I do agree that that is going to hold up in the future. However, at this moment in time, we do need to recognize the 2013 to 2017 bull run was approximately 4 years. It was a 4-year cycle, 1,477 days. If we extrapolate this, how long was this cycle? 1,428 days. This represents an approximate deviation of about 40 to 50 days within this cycle. So once again, another 4-year cycle that panned out to the teeth. And I expect the bear market to be very, very similar. However, like I said, the state of the economy is a lot worse than it was back then. We've spent a lot of time on this chart. Let's hop over to the next price target. So like I said, on this chart, 200-week moving average would be predicting a bottom around about 22,000. Previous all-time high at 19,800. But what happens when we quantify Bitcoin against the money supply? So once again, if you're new to my channel, warm welcome. I hope you do enjoy the data. But this chart, because you may have not seen this before, I don't know anyone who does this. This is the BTC USD price divided by the M2 money supply. Now, you might be wondering, why would we divide by the M2 money supply? Well, the M2 money supply is basically a measure of readily available cash. This constitutes things like cash, checking deposits, bank balances, and close and easily convertible assets, easily convertible commodities, easily convertible cash, basically. So, you know, checking accounts, all of that good stuff. Another way of saying what the M2 money supply is say, for example, if there's an increase in stimulus checks, which there was last year, then obviously the amount of the amount of money that will be in people's checking accounts and people's savings accounts will increase, and as such, the M2 money supply will go up. So when the M2 money supply increases, it typically means that there's an increase in the supply of money within the economy, specifically the US economy. Now, what happens when we thus divide Bitcoin by the M2 money supply? Well, we are accounting for inflation, because if we divide Bitcoin USD by the M2, then we're saying this is what Bitcoin would look like if there was never any inflation. And as you can see, the charts look very, very different. This was your previous all-time high, 19,900 and something. We are approximately 22% above the previous all-time high. What happens if we look at if there was no money supply, or if there was no increase in the money supply? We're 21% down, which represents about a 25 plus 21 or so, about a 46 to 50% deviation between these two charts. What's another way of saying this? When we account for the money supply, the price is about 50% more towards the downside. The reason for this is because there was an increase in the money supply, because lots of people got airdropped free stimmies, free stimulus checks, whatever, then more money found its way into the economy, more money found its way into crypto. And if you look at the day when these stimulus checks came out, people were buying, you know, $1,000, $1,200 worth of Bitcoin, just like that. So that shows how an increase in the money supply can drastically move the price of assets, commodities, and most importantly, Bitcoin up. When we do quantify against the M2 money supply, we're already down at the 200 week. And I would like to highlight, in previous ranges, we do not capitulate more than 35% over here, 35% over here. So if we were to have another drop, bear in mind this is an index chart. This does not represent the price chart, because we are dividing by the M2. So this, once again, this is not a price chart, this is an index. And because of this, we do not have an exact value associated with the drop from the M2. However, if we do look, this would represent about a 33% drop when accounting for the money supply. So if we were to extrapolate a 33% drop over on the Bitcoin price, which I'm not necessarily predicting, this would take us down to 15 to 16,000. That price target is very, very similar to the Elliott wave count if we do come down to the one wave, which is round about 14,000. But I specifically said I believe we would bottom somewhere between the 1 and the 3 waves. So this would be in perfect confluence with Elliott wave theory. If we did have our bottom, and then we could start our next bounce, potentially I think we'd be coming up to 40,000 for the first bounce, then our 2 wave, probably coming back down to 19,000. You know, you can start seeing these big increases, free wave. You know, I'm really just drawing lines in the sand that has not come into fruition. This is not really exactly what I see panning out. These are not the price targets I see panning out. This is just a rough drawing, but something like this is what I see panning out. I'm very confident in the first two waves, so I think that we would be coming up to 40,000. I think we'd be coming back to 19. What happens after then, we will have to see, you know, judging based on how the economy is running at that moment in time. Now, to wrap up the video, we've talked about Bitcoin against the M2 money supply, we've talked about Bitcoin moving averages, we've talked about Bitcoin areas to bounce based on previous all-time highs, we've talked about Bitcoin Elliott wave theory, we've talked about, or, you know, actually we haven't talked about the Bitcoin dominance. All I want to say about the Bitcoin dominance is because I do make separate, much more in-depth videos about this. It seems like we're coming back down and back testing the breakout. Now, you know, bear in mind, it does not matter what happens day over day. The Bitcoin dominance is a macro chart, and we've just broken out of a huge macro pattern. If Bitcoin comes back to 47.7%, 47.3, or even round about 47, where the moving averages on the daily are, and then we start to push back up, once again, I am warning you, you are going to see altcoins get absolutely decimated. Let's move on and wrap up the video with what is going on in the dollar and the stock market. Now, the dollar recently broke out of a bear flag. It's going up on a massive rampage to the upside, and we're already coming back up to the local high, or, you know, the all-time high for this cycle. Now, the dollar, do not count the dollar out. I was literally saying this down here on the 30th of May. I pointed back to previous examples where we've seen this before on the dollar. I said, you know, until the dollar starts macro capitulating, don't count it out, because we've done this before. You know, we had a local top, everyone thought the top was in, we broke down, everyone thought we were cascading to hell, and then we bounced back up stronger than ever. And I do believe in this economy, in a risk-off economy, the dollar is the king. The dollar is very strong. I do not think that's going to be like that forever. The dollar is a shitcoin. It is a hyperinflationary shitcoin, and over time it is going to zero. If you look at, you know, how much a dollar can buy in the past, you know, 50, 100 years or so, you'll see that it has already dropped 99%. So I expect it to drop another 99% over the next decade, and then another 99, and then another 99, until everything's probably priced in something else, or Satoshis. With that being said, if the dollar keeps on heading up, you are going to see the stock market get wrecked. Let's talk about the stock market then. So the dollar's going up, right? I said the stock market's probably going to get wrecked. The stock market is about to open its pre-market at $381, representing a drop from its diamond top, down 7%. This would be coming right back down to the lows. There is a ton, well, at this moment in time, obviously, the stock market is not open. This was last open on the 10th. We're waiting for the market to open, hence the pre-market over here. If we do get a massive influx of volume coming in, bearish volume like we did see on Friday, this is going to massively mess things up. Now, I don't want to do a bunch of TA on the stock market. I simply want to show you the SPY is breaking down massively. The NASDAQ is breaking down massively. The SPX is breaking down massively. You know, Google, Tesla, all of these are getting wrecked. You know, Google's opening all the way down here. Tesla's opening all the way down here. Facebook is opening all the way down here. So it's not looking good. That's the fact of the matter. So I hope you enjoyed today's content. In my opinion, we should look at bottoms. My absolute low is 14,000. I don't think we're going below 41,000. This would invalidate the macro Elliott wave count. I don't even think we're heading down to 14,000. I don't think we're going near that price target. However, I would not be surprised if we come back down to the previous all-time high at 19,000. I would not be surprised if we temporarily wicked below it, maybe come down to 16,000. But yeah, that is basically what I see coming into fruition for Bitcoin. I do expect lower price targets are going to be coming in very soon. I do also expect that a local bottom is going to present itself within the next couple of weeks or so. So be very cautious. There's a lot of volume coming in on this. The Bitcoin dominance is clearly king right now, and Bitcoin is very likely to outperform all the altcoins. Hope you enjoyed today's content. Hope you found some value in looking at a range of different perspectives. As always, not financial advice. Cowboy out. Peace.